Hello, traders, and welcome to the Pine Street Capital YouTube channel where we talk all things trading and investing. My name is Ron, and I'm the managing partner of Pine Street Capital. I've been trading for over 8 years, and today we are here to discuss what the hell happened with my Forex funds. Now, if you've seen the headlines, you would have seen $310 million Forex trading scam shut down by the CFTC. And to give you a bit of background, my Forex funds is essentially a retail proprietary trading firm that provides traders with the opportunity to trade larger capital if they're able to pass an evaluation, right? So my Forex funds has been the largest player in the industry for, I'd say, about a year now, after overtaking FTMO, who essentially were the pioneers of this entire model. And in this video, I'm going to share some of my thoughts on the entire situation. I'll also link a Finance Magnates article that essentially summarizes everything that happened quite well in the description below. So these are some of my thoughts. I think this was essentially a targeted attack on my Forex funds. And they're operating their business in the same way that the rest of the industry is operating. And if you're in South Africa, then it kind of reminds me of the entire situation that happened with JP markets, right? Whereby the FSCA, i.e. the regulators in South Africa, came after a player in the industry that was quite dominant, well, pretty much dominating the industry, and then shutting them down so as to teach everyone a lesson. I mean, there were some dubious things that happened around the entire thing, with the whole quote of emails and messages between people within the company and their advisors about slipping clients to hell and stuff like that. You know, very similar to JP markets, which honestly speaking is predatory and should not be condoned. But at the end of the day, slippage is something that actually happens in real markets, right? And brokers and prop firms, well, at least the good ones, try to simulate live trading conditions, because the reality is, at the end of the day, whether we like it or not, as retail traders, we are not actually getting direct market access. And a lot of brokers, a lot of prop firms try to come out and say that, you know, you are essentially going into the actual markets, when in actual fact, they're bookies. They're basically bookies. And can you fault them for that? No, because the statistics are 90% of traders lose money, right? But at the same time, although you can call the entire business model predatory, it's also given us the opportunity as retail traders to get into the markets at a low enough cost for it to make sense for us to participate. So that's my first thought on the entire thing. My next thought is, they did misrepresent what was actually going on in the background, just like I think every other firm is doing. You know, they essentially say things like, we want to see traders succeed. That's how we are profitable in the long run, right? When in actual fact, the way prop firms are profitable in the long run is through the minority of traders succeeding, which actually happens, and the majority of traders who are failing, essentially paying the traders who are profitable. You know, that's the business model at the end of the day, whether it's brokerage, whether it's proprietary trading, you know. And we can't pretend like we don't know what's going on, you know, because honestly speaking, for me, the reason why I continue to trade with prop firms and brokers is because I know exactly how the business model works. And the only thing I honestly care about is whether I get paid if I make money or not, you know. So that's my thought on that point. Then the next point, I think, is the predatory trading conditions. It's also something the brokerage industry has been doing for years. Would I argue that my Forex funds took it to an extreme? I honestly traded with them for well over a year. And although the slippage was bad, well, it was nothing out of the ordinary, if you ask me. You know, you'd get slipped a few points if you were trading euro dollar, for example, but I rarely experienced slippage of anything more than 1 pip. So, slippage is part of the normal day-to-day trading, right? If you were to go into the actual market, you would get slipped. But when it comes to CFD brokerages and prop firms, it all depends on what the extent of that slippage is. And with my Forex funds, I wouldn't argue that it was very predatory, although I would say that they didn't have the best trading conditions. You could have gone better trading conditions from other prop firms, without a doubt. But at the same time, with the pricing, it sort of justified it, I guess, for most people. So the next thing is the mention of Kasmi buying luxury homes and cars. Honestly speaking, with the CFTC's report and them even mentioning that, I don't think it's even relevant, because this is someone who was running a profitable business that was adding value to people. Otherwise, there wouldn't be that many people who would have signed up with my Forex funds. If you go to Trustpilot, they had a rating of over 4 stars. So this was someone who was providing a service that was adding value to people, and as a result, his business was profitable. Therefore, he decided to use the profits from his business to buy himself luxury homes and cars, because honestly speaking, he added value, so he deserved it. I don't find anything wrong with someone buying, luxury cars and houses if they've earned it, honestly speaking. So my other thought on my Forex funds is the way that they structured their legal contracts, because I then went back to the contract that I signed with my Forex funds, and honestly speaking, I think they could have gotten better legal advice on this, because within their contracts, within their terms of service, they essentially said that my Forex funds was providing a game, sort of trading game. And then in their contracts with traders who are trading live, they then say that the traders who are trading live are essentially independent contractors who are trading my Forex funds when there are no actual funds that are being traded, which then does constitute towards fraud, which makes me lean in the direction of they're probably going to lose this case, because there was misrepresentation, and it was purposeful misrepresentation, honestly speaking. So that's my point there. Then their mistakes, I think, were essentially in the structuring of their legal contracts, which I've already talked about, and in the way in the jurisdictions that they chose to operate in. Canada and the US, arguably the strictest financial regulations. That's why if you go across the entire retail brokerage space, you won't find many brokers that actually service Canada and the US. That, along with the fact that there are huge amounts of capital that you need to put aside in order to operate in those markets, and that's why you only find the large public brokerages who are present in that market, providing CFD and Forex trading. Then my last thought on this is, I think it's very possible that their competition, i.e. brokerages, CFD brokerages, along with other prop firms, might have been complicit in actually getting them shut down. And when you become the biggest player, you have a huge target on your back. So I wouldn't be surprised if in the background, regulators were getting a lot of the information that they had from their competitors. So it's unfortunate that they shut down. I honestly think that my Forex funds was a company that was adding value to traders, and although their trading conditions could have been better, definitely, I don't think there was anything outlandish, completely outlandish, that you'd say they made a really huge effort to prejudice traders that they were doing. So that's the end of my thoughts. And what lessons can we learn from this, I think, is the main thing. We need to take lessons from any situation. And I was fortunate enough to not have any risk on the table as far as this whole my Forex fund thing is concerned. Fortunately, about a month before I'd lost my last 100K account within. I had prior to this entire thing, I had 3 100K live accounts with my Forex funds. But I'd actually lost it before this entire thing happened, and I was probably going to be buying another live challenge right now. But at the same time, I'd also, I was also looking for better trading conditions. So I was already looking into working with another prop firm, and I found one with better trading conditions, that is. So when it comes to lessons that I've learned from this entire thing, it's number one, don't put all your eggs in one basket. The prop firm space is an unregulated space. The waters are still very murky in terms of how these firms are going to be regulated, how they should even operate, and what the pricing is going to be once that regulation actually comes in, what it looks like. We don't know. We don't know what we don't know. And as a result of that, you definitely want to have your funded accounts and your challenges with different prop firms. Because if one goes under, if that one firm that you're using goes under, then you're screwed. And I'm just thinking of a situation whereby if this had happened 3 months ago, I would have had 300K in funding from my Forex funds, and it's all gone. And if I've got no other prop firms, then I'm stuck, and I have to start basically from square one. So that's the first one. Then the second one is, don't put your money into challenges that you're not trading. And that's one thing that I've done in the past. There are times where I've bought, say, 400K challenges and just let them sit there whilst I'm trading a live account, and then essentially focus on one challenge and then leave the other 3 in the back burner. That's something I've done in the past. And after this entire thing, I was just fortunate that this entire crackdown on my Forex funds happened at a time where I had absolutely no risk on the table. So definitely do not put idle money into challenges. Then the next thing is ensure that you have an emergency fund, especially if you're trading for a living, and that's one thing that I've done pretty much since the beginning of my trading career. I've always ensured that I had an emergency fund. I mean, back when I was young, I definitely didn't even consider an emergency fund to be an important thing, but definitely have 6 to 12 months worth of your living expenses sitting in an account and just idle for a rainy day, because this could have been a really rainy day for me if I had risk on the table with my Forex fund, but fortunately I've put all the safeguards in place. Then the other thing is multiple streams of income. You definitely need to have multiple streams of income, especially if you're trading for a living. If you're reliant on trading, number one, the emotional side, right? You're a lot more emotional about your trades. It matters a lot more whether your trade wins or loses for you mentally, if you don't have multiple streams of income. And the other thing is you don't know whether you're going to make money this month in trading or not. So better to have those multiple streams of income in place. Then the next thing is make sure you understand the prop firm that you are trading with. Make sure you read through the terms of service. Make sure you read through the contract once you actually get funded. And this is something that I hadn't read the contract as closely as I thought I did, until this entire situation happened. So yeah, those are the main lessons I think we can take from it. And going forward, I think it would also be important to essentially check the contract structure of the prop firm that you're trading with. Do they, in their terms of service, do they say that they're providing you with sort of a simulated trading game? And once you actually funded, I remember watching the founder of the Funded Trader essentially saying the way they structured their legal contracts was their funded traders are not actually independent contractors who are managing their money. No, because they've been very transparent about the fact that, listen, not everyone is actually backed with live capital. They actually came out and said that within their contracts, their funded traders are they're independent contractors, and they provide the company with data. Right. So it was a very smart way of structuring it. And honestly speaking, I wonder why my Forex funds didn't do the same thing. Then with regards to prop firms, another thing that I think we can learn from this entire experience is check out what your prop firm's regulatory approach is. Have they, prior to opening their business, gone and interacted with regulators and asked them whether they need regulation? Are they constantly working with regulators to ensure that they're always on the right side of regulation? You know, I think that would be a very important thing, particularly now that prop firms are on regulators' watch list, you know. And the other thing is, be careful what jurisdictions your prop firm operates from, because some jurisdictions could put them at risk of regulators coming into the picture and essentially shutting them down. Then your money's locked up. You know, I might do a separate video on jurisdictions that I think I prefer. But for now, there are particular jurisdictions that I think I do prefer in terms of prop firms. And, you know, for some of the prop firms that I think are safe to trade with, particularly from their regulatory approach and the jurisdictions that they're in, along with also the background of the founders of the prop firm. Do they have previous experience in the industry? I think that's going to be more important as regulation comes in, because if you're trading with a prop firm that has founders who don't have much previous experience within this industry, then you could be in trouble. So in the description below, I will include links to prop firms that I think are trustworthy given this entire situation. So far, I've honestly found just one, but once I do find more prop firms, I will include them in the list below. So just check out the links in the description below if you're looking for a new prop firm, if you're affected by this whole thing with MyForexFunds. You know, it's important to stay protected. But other than that, I'll see you guys in the next video. Take care.